Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Roma Pithadiya, who's the President and CEO of Affordable Insurance and Financial Services, and we'll be talking about managing risk in retirement. Roma, welcome back to the program.
Thank you, Mike. Thank you for having this opportunity to talk about today. Talking, and thank you for inviting me over here.
You are welcome. It's always great to chat with you. And I know that you have a special feeling towards your clients to help them reduce risk, because we all are afraid of risk in many areas, but especially in retirement, because we've worked so hard to save up money and hope we have enough saved for retirement. We certainly don't want to lose it. So talk a little bit about your hybrid approach to protect risk in retirement, because there's not really one formula that tends to be the solution for everyone. So you take a unique approach that way.
That is good. Yes, that is correct, because hybrid approach is the most important. Long time ago, it was a pager days. Now it's iPhone 15 and 17 Pro Max days.
Yeah.
So we have to think pager can change from iPhone, and entire office is in a cell phone. Why not in the savings bucket or investment or all that things? Tax-free retirement is all about a combination of tax defer, tax-free, and liquid assets, no matter what happens. The tax laws, market, economy, even though managing risk, spreading the money across. And that's why hybrid policy, just like if I take one example as a life insurance. So life insurance is a olden days like a pager. Everybody was thinking that life insurance means talking about my die. And I don't want to talk about. But no, nowadays are changed as a Pro Max 17. Kids education fund is in there. Mortgage is in there, business, savings, executive plan, key employees, long-term care, even though I want a at-home nursing home at home. That's not only for life after death, but I can use my life insurance for go, slow go, and no go. All the time of my life, I want to use it. That's why hybrid approach is the most important work, because it doesn't pull your money from the one bucket. It's spreading out the all risk.
Let's talk a little bit about that go, slow go, and no go. I've heard that before, but I really want to dive a little bit deeper on that, because I think that sometimes people make the assumption that I'm just going to save up all my money and have this wonderful retirement where I'm just going and traveling and doing all these things, but sometimes our bodies don't cooperate.
Yes, go means when I was young, I did enough savings, like a 401k. You know what? Generally, what happened that people of America, millions of Americans, retiring feel like they are already did a proper savings. But no.
Yeah.
If I am on age 65, now time for retirement. I did enough work so hard. Now I want luxury vacations. I want to enjoy my life. Great vacation on the ocean. Great vacation on the cruise. I can do luxury way my vacation. That is my go money. And also I want a nice car to drive around. That is my go time. Slow go time. Yeah, I did enough vacation. I enjoy my life. Now I want to stay with my family and friends around me on my age 70 and up, like a 70 and 80. Yeah, I just want to enjoy with. So that is a slow go time. But also bill comes there. So we have to think about too. And no go. No go means think about a longevity risk. If I am on 80 plus living my life and I'm in the long-term care, so I want a nursing home at home. So that means no go. I am not going anywhere. I'm in the bed, take care of myself. I cannot do my activities by myself. Somebody is cooking for me, cleaning for me, taking me to the doctors and hospitals and all that things is a no go. But also I want luxurious way. So go, slow go, and no go is the most important for tax-free retirement. Make sure during the any of these three stage, I don't lose my money or end up with my social security. Make sure I covered up enough social security and my retirement with long-term longevity risk and also with the market risk.
You know, I was talking just recently to my wife about what you just said in a different realm, which is planning ahead. And I feel that too many times people don't plan ahead at all. And then if they do, they don't plan ahead the right way. So what you just described was the fact that we must realize that there are times in our life that we will be able to go. And then we're going to be able to do all the things we want to do. But we need to recognize the fact that maybe we aren't going to be able to do all the things we need. And then we factor in that risk. That's a planning factor. So in your work with your clients, what are some of the misconceptions they have about a tax-free retirement that they come to you and you notice that they really don't understand it correctly and you need to help them understand that tax-free retirement planning? Because we're not just talking about risk, we're now talking about tax-free retirement planning. And that's huge because a lot of times, I'm sure you've seen this before, people will come to you with $1 million in their 401k and be all happy and saying, I've got $1 million. And you will say, you really don't, because your silent partner, the government, Uncle Sam, he owns a big chunk of that. So talk a little bit about that tax-free retirement.
Biggest misconception of the tax-free retirement, generally wealthy people thinks that this is only we are billed only to pay the tax. But that's not true. The millions of Americans retire feels like a promise, reward waiting for the end of the decades of the hard works. But the
Yeah.
truth is far more than complications. Misconceptions like 401k. They think that a 401k is enough. But did you thought about the longevity risk as well? Did they thought about the market risk? All that things is a very important. Even though social security, what you are paying a tax right now, did you open your social security account as a social security ssa.gov account? Did you check how much did you pay the tax and how much you allow in case something happened today? Did you check that? Figure it out when I'm old. Instead of thinking all I will do later on, instead of I am saving, so I must be fine. That's the people thinks that. But behind the illusion lies a reality many don't see until it's too late. So instead of illusion, we have to think about the solution from today, not when we are going to retire. Taxes will be higher in the future, just like you said. Mortality risk, market volatility doesn't stop when you retire. Longevity risk is also real. People are living longer than what they think. Even though healthcare cost is been raising dramatically with the age, guarantee income is not guaranteed until and unless you create it. Retire illusion is just a gap between the people think and the actually. So instead of think about the illusion, we can talk about the solution. And that is today and right now.
It really is. You got to have your finger on the pulse of what's happening now and what can happen in the future. And if you plan for some of these risks that you're talking about and they actually come to fruition, then you're ready. If you plan for those risks and they don't come about, then you're ahead of the game. So I think that's a really big realization. What do you feel that some steps that people can take today are that can move them a little closer to that secure and tax-free retirement in the future?
Well, that is the first step, is get the clarity on
Yeah.
where your money is today. How much is a taxable money? Already you have a buckets. How much you have a taxable, how much you have a tax deferred, and also how much you have a tax free. That
Yeah.
is, we can see today, which is you already did in the past, whatever you thought about today. But, and the second is, let's diversify the tax exposures, not just investment. We have to think about investment and tax free retirement. The third step is, we already did the all portfolio, but now, right now, we have to think about start repositioning all of the assets into the tax advantage strategies early. Time is your biggest ally. And finally, work with the professional who understand your model of business. All professionals are great, but they don't know the business owner personally. What is
Yeah.
their habits of investment? What is their habits for taking the challenges? What is unexpected health issues can be? So knowing the professional, but who know your model of the business, practice of your business, and early you start, the more control and confidence you will have in the retirement.
I feel like what you just said there is so important because we as a society are so used to being self-sufficient and independent. And then we couple that with technology like Google and AI. And we think, oh, well, I don't need to go see that financial professional. I'll just go Google it or go to AI and find out how to set up a tax-free retirement. And that might have some interesting information, but it won't be customized and personal to you. So talk a little bit about the power of working with someone individually like yourself who asks the right questions, who's looking for opportunities to customize that plan and not just giving the same thing to everybody.
That is a great question, actually, because I have all type of client. Highest wealthy clients like a doctors, hoteliers, but also middle of the wealthy clients, and also somebody is a building their career. So all that three step of the business owner, we have to understand right now what they have reality is they are growing with a small business right now. They are learning right now. They are having a new family right now. They can have, kids in the beginning of the years, buying a house, selling the house. So they have a more liability than they have equity and assets. So we have to understand what kind of life insurance they need, what they can afford, and what is their future plan in the near, how much they are growing with the business. But the life insurance also we can do like on the hybrid way of the life insurance, which is a multiplying use of the life insurance. Instead of pager, we can go to all the way iPhone Pro Max 17, because of the one policy can use for the multi-purpose use. And also when they are growing, when the kids are already gone to the school, college, and everything, then they not need kids education fund. But in the new challenge come as a health. Health is also important. One challenge is going, but the other challenge is arriving. So we have to think about whatever the reliability and responsibility gone, But at the same time, what the new challenge is coming. But at the same time, we are in the real estate business and all other things. We have to think about the equity and assets also to protect. Otherwise, Mr. Sam can come anytime. So we have to think about that too. So that is also financial advisor, main person to be advised or about the investment, understand them, recommendation them, and also the growth is also important. Once they finish that equity and assets, then we have to protect with the leveraging that product. Building the business is enough, but it's not enough. We have to think about grow the business too. When we are growing the business, then we have to think about leveraging the business too. So
Yeah.
we are a business people. We are putting one challenge. We are moving out from the previous challenge, but coming out with the new challenges. We have to think about everything. So every client has their own challenges, and that's why we have to customize their needs. We have to understand what kind of risk factor this business owner is been taking, moderate or extreme. That is the point. We have to understand as a financial advisor, when they need money, make sure they say today, oh, I not need money for 5 years. But maybe next year they come say, hey, Roma, I need money. We have to think before they think about their own money.
Yes.
As financial advisor.
Because then people feel like you really are caring for them and taking their needs into consideration when they're not the ones always bringing it up ahead of time.
So many times even they don't have a question exist in their life. But as a financial professional, we have several different clients, all kind of wealthy clients. They already feel their challenges. They are already sharing with us. Already we are experienced, which is our new client doesn't experience that. So it is our duty to make them understand, aware them with the reality. This can be possible too. Any emergency, anytime.
Yeah, I love it. Well, Roma, it's been really great chatting with you again. This is really interesting and relevant information. If someone is interested in learning a little bit about what you guys do, what's the best way that they can reach out and connect with you?
Yes, my name is Roma Pithadiya. Phone number is 972-693-3315. Even though they can go in my website, www.AIFSgroupbyroma.com. They can put a comment and concern over there too. Even though YouTube channel, if they do Roma Pithadiya, there is several information is already, maybe they can get some information from there too. I can answer any phone call anytime, 7 days a week, 24/7, because I'm passionate and I love my client. Their future is my future.
Yes, I love it. Well, that's been so great chatting with you again. Thank you so much for coming back on.
Thank you for giving me this opportunity and chat with you.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.